Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
We pioneered this concept of combining software and payments and hardware into a single solution for merchants.
Doing something as simple as attending a sporting event usually involves making a series of transactions with several different vendors. You purchase the tickets online, you pay for parking at the stadium, maybe you're buying a hot dog and a beer, plus a jersey and a hat for your kid. Well, one company promises to consolidate all of those transactions and all of that data onto one single platform, and delivering on that promise has led to incredible growth.
We were 3,000 employees less than 2 years ago. We're at 6,000 now, and we're in 75 countries we weren't in just 2 years ago.
My name is Tom Ryan, and this is Welcome to the Arena, the ICR podcast. Each week, I sit down with today's business leaders to give you an inside scoop on some of America's most prosperous public companies, their origins, their challenges, and the keys to their success. My guest today is Taylor Lauber, CEO of Shift4 Payments, which trades under the symbol FOUR. Taylor has been with the company since 2018, with prior roles including President and Chief Strategy Officer. He has been a corporate officer since the company's IPO in June of 2020, but his roots extend far beyond that, as he was one of the company's first interns 25 years ago. Prior to joining Shift4, Taylor worked at Blackstone in a variety of strategy roles, and before that he worked as a private banker at Merrill Lynch. He received an economics and finance degree from Bentley College. Let's enter the arena with Taylor Lauber. For people who don't know a lot about Shift4, maybe tell us kind of at a basic level, and it's not a super basic story. You have so many interesting technologies that kind of work together. What does the company do, and kind of at what scale do you do it?
Yeah, sure. Well, we like to say we power the experience economy.
Yep.
What that means is we help merchants of all sizes deliver a commerce experience to their guests, their patrons, their fans. That can be everything from a bar and grill, owner-operated in the middle of the country, up to the largest casino resorts or stadiums around the world.
There's a lot of players in the ecosystem of payments. Where do you fit in? What kind of value are you delivering every day?
Yeah, sure. We began as what we would call a general practitioner of payments when that was innovative, believe it or not, 28 years ago.
Yeah.
Just the idea of enabling a business to accept electronic payments. Picture your local pizzeria that might have been 100% cash at that point in time. As you could imagine, the technology and complexity of just accepting payments has evolved with the needs of the consumer, with the needs of the business. Back in the early 2000s, it meant combining software with payments so that you could run your business really easily. As a restaurateur, you could maybe put in an order behind the bar and it would notify the kitchen that they've got, a cheeseburger to cook. All the way through to the fulfillment of that order. And then ultimately what that merchant wants was just the deposit at the end of the day. I've just described a very basic level of complexity, but you can start to see this evolution from just accepting payments to incorporating the workflow of the business, the guest experience, et cetera. Now take that and multiply it by all of the software a small business might use today. Just to put an example in front of you, your average restaurant might be using as many pieces of software as a hotel did 5 or 10 years ago. And your average hotel might be using dozens more than that. And so the ability to connect all of these different pieces of software, whether you're trying to run a salon or spa in your Vegas resort, or simply connecting an online ordering application into your restaurant's point of sale system, we enable all of that. And again, sort of began our journey providing the service to small business. And what we found is if you can sort of solve those pain points for a small business, the giant businesses want them solved just as much.
Yeah.
And that's where we've really found a way to differentiate ourselves, is solving that complexity and embracing kind of all the modern ways consumers and merchants want to do business.
Yeah, when I first remember seeing the Shift4 logo a really long time ago, I would kind of swipe my credit card by paying for something into a piece of hardware. And then, as I was looking deeper into Shift4, you're talking about software and payment solutions. But then what I think is so cool, and what you kind of alluded to, is business intelligence tools, customer feedback and email marketing and all that stuff, and also merchant operations and support and onboarding them. So it's really like this super platform where, you're kind of benefiting everybody involved for the benefit really of the customer at the end of the day.
Yeah, that's exactly right. The environments we specialize in are predominantly in-person experiences, even if you might be ordering something from an app in a theme park or from your seat at a baseball game. It's predominantly an in-person experience. And so the ability to deliver a really high-touch experience with great technology in the way that consumers used to paying, kind of regardless of the venue that they're in, is something that merchants obviously see a lot of value in.
Yeah, and maybe talk specifically about the industries. You kind of alluded to hospitality, but maybe talk about the industries that you really specialize in and focus on, and by the way, continue to gain market share in.
Yeah, sure. I'll start with the concept that we really began specializing in restaurants. So we started, as I mentioned, as this general practitioner of payments.
Yep.
We started serving restaurants because we saw a really interesting need there, this idea of heavy physical commerce experience, but with a need to combine a lot of the technologies in a restaurant and make life easier for them. We've really found no upper bound to solving those problems. And that took us from, that restaurant owner-operated bar and grill in hypothetical Boise, Idaho, up to maybe that restaurant now sits inside of a hotel. And you need to solve the same problems, but with different software, front desk software, salon spa, the lobby bar, the golf course, et cetera. So we grew from a business that predominantly supported restaurants into supporting about 40% of the hotels in the country. And what we've learned along the way is that this need for large merchants to support a lot of different software to maintain a guest experience sits in a lot of different verticals. Yeah. So we have a presence inside of stadiums that's quite substantial. We're in about 75% of the stadiums and theme parks across the United States. And that can be everything from, as a fan, you go to Ticketmaster to buy tickets to the Yankees game. We're powering the payments under the hood on behalf of the Yankees. And then you visit the stadium. You might stay in a suite and order a bunch of catering items. You might sit in the stands and order a beer from the app, or you might walk up in line. We support all of those different revenue centers on behalf of the Yankees, and they can follow their fan throughout that experience. And as you can imagine, that's really valuable to them. And then most recently, we've only just begun to expand in what we call luxury retail. So we acquired a business that supports the largest luxury retailers around the world.
Back to the Yankee Stadium, or MSG for that matter. I was a New York Ranger ticket holder for a long time. The last game I went to, they didn't accept cash, which I was surprised at. But not only are you kind of piecing all of this together, whether I buy a hat or a jersey or a beer, like wherever I am, but you're also collecting data there and really managing that whole end of it for Yankee Stadium or the Garden or whatever, right?
Yeah, that's correct. So there's a lot of reasons why cash can be a liability for a big, complex environment like that. It's prone to error. It's prone to theft. So there's a natural proclivity to want to accept electronic payments, but that also opens the door to an incredible data opportunity for that operator. They're no longer asking you to provide a bunch of different points of information at what is a really high frequency point of sale, right? When you're in a long line for a beer, they don't want to ask you for a bunch of other things, but they really want to know what your preferences are as a fan and be able to track you. And so, as you can imagine, having a single platform they can log into and see a fan or a patron throughout the entirety of the journey and everything that they spent as a part of that experience and what they enjoyed and what they sought out. The jersey I might buy for my kids, the couple times a year I go to a game, that data is incredibly valuable. And it requires a platform like we deliver to connect all of these different revenue centers and deliver it.
Do you have branded parts of the business like SkyTab, Lighthouse, Shift4 Shop, the Giving Block? Are those all kind of things that you put together for the customer? What are those brands within the brand, if you will?
Yeah, quite frankly, I think they deliver a lot of confusion. What starts as a product endpoint is largely because a merchant is used to buying a lot of different products to assemble under one roof. And the journey we've been on, at least in terms of fulfilling their experience for the last 10 years or so, is to give them one platform that is Shift4. And whether they need it for their restaurant, whether they need it for their charitable giving, whether they need it for analytical purposes, we consider it all Shift4. And so what you're going to be hearing a lot from us is, yes, we have awesome products that do all of the different things that I mentioned there and many, many more. But it's really Shift4's ability to deliver that as a platform that's more valuable than anything else.
Yeah.
And it's been quite fascinating because we've seen no kind of upper bound to the size and scale of the merchants that we support and the merchants that seek out these kind of solutions. So simplifying the story and saying, when you call Shift4, you can get everything you need under one roof is the journey we're on. But yes, ton of products to make that happen.
Especially when you pursue growth through M&A and you buy different brands, it takes a while to kind of turn the battleship around, if you will, and get everything like super unified into a simplistic message. You started as an intern 25 years ago, which is such a cool story. And I know when you came back after a number of years, the founder, Jared Isaacman, stepped back. After 3 decades, those are really big shoes to fill. How has stepping into that leadership role kind of evolved for you, and what stamp are you looking to put on the business?
It's a great question. I'd say in some ways it's quite natural.
Yep.
Jared and I had a pretty clean, what we would call delegation of authority, the things I worked on and the things he worked on, and quite frankly, a really tight feedback loop between the two. And so I would say the day job hasn't changed dramatically in terms of kind of the things we got to wake up every morning and execute against. But the company's changed dramatically.
Yeah.
I mean, we were 3,000 employees less than 2 years ago. We're at 6,000 now. We're in 75 countries we weren't in just 2 years ago. So it's certainly a daunting task, and Jared is an incredible and inspirational leader, but he's also our largest shareholder. And believe it or not, even as recently as yesterday, continues to buy stock. So I wouldn't say the feedback loop is closed by any means. As we would listen to any large shareholder of our business, we pay a lot of attention to his perspectives, and quite frankly, his perspectives are even better than many other shareholders because he's been in the seat for as long as he was.
Yeah. So, no matter how complex the business is, it's about adding new customers and kind of landing and expanding and, bringing the breadth of all your products and services into those companies and customers. Talk about organic growth and kind of when you look out 10 years, what's the TAM and the runway for that? Maybe, and we'll talk about M&A in a minute, but how do you view organic growth over the next 5 years or so?
So, incredible amount of opportunity. So we pioneered this concept of combining software and payments and hardware into a single solution for merchants. And we've proven to ourselves that there's no upper bound to the complexity that we can serve via that model. And the biggest merchants in the world, with all of the resources that they can bring to bear, still want that. So that's really exciting. And that's led us to continue to grow the average size of our merchants in the restaurant vertical. Similarly, winning something like the Wynn, an Encore casino resort in Las Vegas, can illustrate the organic growth power of the business within the vertical. I mentioned all the stadiums, and yet not just supporting the physical stadium, but being able to branch further into other revenue centers that wouldn't necessarily be intuitive, like, yes, I'll support your entire stadium, but I'll also support your online ticketing sales or your group sales, is an example of the ability to grow wallet share in addition to the market share strength that we have. But perhaps what's most exciting, and this is kind of a play that I borrowed from the Blackstone playbook, is every market around the world is at a different stage of technological and regulatory and societal evolution. And if you can take something that's proven to be very successful in one market and apply it to a less mature market, your likelihood of success is going to be very high because you know where the pitfalls are. And that's really where we see a tremendous amount of opportunity. And, you can look at markets that are incredibly mature, incredibly sophisticated. I'll pick on London as an example. And there's often a non-integrated bank terminal sitting on the counter that they punch in what you owe like it's 20 years ago in the United States. Yeah. So we see a really awesome opportunity to enable merchants with the same solutions and the same go-to-market playbook that we perfected over 20 years in the United States all over the rest of the world.
I think on the M&A side, you have decided to maybe throttle back or de-emphasize that just slightly, not saying that you wouldn't jump on something that's a great target. But how do you look at M&A when you look at it 26, 27, 28? What's your ideal target, hypothetically, when you're looking at something to be additive to the business?
It's a great question. And maybe more importantly, what do we use M&A for as a business? We use it to solve our problems. If there's a piece of a complex commerce solution and merchants need to buy that piece and then need to buy this piece, and we believe we can combine them together and deliver a better solution, we do that often.
Yep.
That's what got us into the hotel vertical. That's what got us into the stadium vertical. And when you combine those pieces, you win all these great new customers as a result of a better go-to-market. So M&A has been an enabler for us. It's a sustainable enabler, believe it or not, because the number of tools merchants use to conduct business keeps growing.
Yeah.
You know, there might be a great loyalty solution that pops up that merchants become really enamored with and they can't run their business without it, or a great gift solution in the case of something like the GiveX business that we acquired. By buying that business, you have merchants that had a level of complexity that was such that they went out and bought a bespoke solution just for gift cards. And yet, when are gift cards not part of a broader commerce experience? Never, right?
Yeah.
And so the idea that you can buy that business and deliver all of their customers a more cohesive offering makes a ton of sense. It is certainly less risky than kind of Google AdWords and traditional sales and marketing dollars.
And faster.
It's in our mind, it's a lot faster. I mean, to tell you that we went from no hotels when I joined the company to 40% of the hotels in the United States.
It'd be impossible organically, or it would take another 15 years, right?
Yeah, that's right. And a lot of capital risk along the way. So we see M&A as an enabler for us. We have a pretty rigid formula. So it's kind of, do the dollars make sense in our customer acquisition algorithm? And then do we think that the combined offering gives us a better right to win?
Yeah.
And that's been the case, at least in all of the M&A that we've done to date. Now, maybe just to zoom out from the tool and to think about capital allocation more broadly, how does the company think about spending its next dollar? This is an incredibly interesting time in the capital markets.
Yeah.
Most investors are petrified, and they're petrified through the lens of things like geopolitical risk. They're petrified through the lens of things like AI and innovation risk and what that does to businesses. And in payments specifically, they're very uncertain as to who's going to win and who's going to lose. And in environments like that, you have to challenge whether a dollar should be spent buying your own company versus buying other companies versus investing in M&A. And we're fortunate to generate a lot of free cash flow. We're fortunate to generate a lot of profit. So we actually have this kind of interesting challenge of where to spend our dollars. And we have more dollars typically every year than the year before it. And at this moment in time, buying our stock versus some of those other things is at a bigger imbalance in the favor of buying our stock than it has been at other points in the market cycle. So we've purchased, at least in the last 6 months, about 8 to 9% of the company back from shareholders, which is really exciting. For our loyalists, it means they all own meaningfully more large portion of the company than they did before.
So it's clear that Shift4 has many different levers to create shareholder value in the coming years. But one thing that specifically caught my eye was their recent acquisition of Global Blue, a business that facilitates tax-free shopping. I asked Taylor to explain the logic behind that acquisition and what it means for Shift4 to be entering that market.
Over the last 10 years, we've had this drumbeat from big international customers that say, I really love this comprehensive integrated platform solution you give me in the United States, but I want it in these other markets around the world where I'm still dealing with a bunch of fragmented solutions.
Yeah.
We might be compatible with the software at the hypothetical Hilton in Madrid, and yet there might be a bank terminal that's not at all connected at the counter. And so there's been this drumbeat that international demand for our solutions is quite high. That's been like a decade-long drumbeat. That's kind of one theme. And then the other theme is we constantly look at big markets and say, what solutions in those markets give us the right to have a conversation with a customer? And retail is one that we spend a lot of time on. As you can imagine, this trend from physical commerce to e-commerce, there's lots of moving parts. The winners and losers in our industry have changed dramatically over the last few years in the retail vertical. And it's been about a similarly decade-long phenomenon that we've been looking at this tax-free shopping solution and saying, this is a highly differentiated product. So for those that don't know it, many tourist-centric economies around the world allow the shopper traveling to that country to buy a luxury item and get the VAT tax back that they paid. So it's an incentive for tourists to go and travel. It's an incentive for them to spend money. And then as they leave that country, whether it's the airport or a cruise ship or something like that, they can get a refund on the VAT tax that they spent.
Yeah.
There's really only 2 businesses in the world that do that at scale, and Global Blue is one of them. And so if you can imagine, we've got these two big kind of strategic imperatives inside the company. One, how do we expand internationally in a practical, prudent, cost-effective way? And then number two, how do we get into retail with a tool that gives us the right to sit at the table and have conversations with the best merchants in the world? And Global Blue offered both of those, as well as, quite frankly, many other things.
Yeah.
And so we are now the largest tax-free shopping provider. We're in 75 countries around the world, again, that we weren't in 2 years ago. We have all of the best luxury retailers in the world as customers today. Those customers are using a bunch of different vendors to make payments work, of which Global Blue is one of them. And we believe we can deliver them a more comprehensive solution. That's kind of step one in the retail vertical. Step two is we now have a beachhead in these 75 different countries that we can deliver products that we've proven success with in the United States, whether that's our restaurant product, our hotel platform, or our sports and entertainment and theme park product.
Yeah, I thought another cool thing that likely helps you with international expansion is kind of the stablecoin settlement platform, where you've got customers, maybe they want to move money quicker, 24/7. There are certainly traditional banking constraints. Maybe talk about that. I don't know if it's a big part of your business or not, but it's certainly something where you have to have table stakes, I would imagine, as things pan out over the next few years.
Yeah, it's an interesting kind of topic because I think when you can talk about whether it's cryptocurrencies, stable coins, or quite frankly, really any method to pay, there's a lot of emotion and debate that kind of creeps into the dialogue.
Yeah.
And to the extent we're not certain whether something is kind of an asset or a currency, or maybe it's a little bit of both, you can think about it with different preferences. We sort of take a step back and say, it's not our job to prescribe what merchants want to accept and what consumers want to use to pay. We need to enable anything that we think is going to be relevant. And so stablecoins being one great example of merchants who say, I want to be able to accept stablecoins and hold those stablecoins, or I want to be able to accept stablecoins from a consumer and get them in dollars just like I would get a payment with a Visa card or an Amex or something like that. So we enable all those different capabilities. And where it's perhaps most prevalent is actually in the charitable giving front.
Oh, interesting.
As you can imagine, charities want to take basically anything of value that a donor wants to provide for them. And donors have very specific preferences.
Yeah.
They might want to give cryptocurrency. They might want to give stock. They might want to use their credit card. And so enabling as many payment methods as possible is actually really critical in that vertical. And prior to Shift4, what that meant for the charity was spinning up a different platform every time one of these things became prolific.
Right.
And with, I think, a well-placed M&A acquisition and some product innovation and investment behind that, now a merchant can use Shift4 to accept cryptocurrencies, stocks, stable coins, credit cards, all through a single platform, which is great.
Yeah. And, just keeping on the international expansion, this is really like a CEO question, but how do you build that cultural, operational, and customer experience consistency across regions? Or does it not have to be consistent as you're doing business in all these countries around the world? How do you think about that as the CEO? That's a tough one.
It's a very tough one. And I think you can kind of trick yourself into the belief that it should be consistent. I would argue it shouldn't. It's not just in different geographies should the service model be different, but for different customers. We have customers like the Super Bowl that was played a few weeks ago that demand a team on site for that event. It's that critical, and we supply that to them. Contrary to a small business that just wants to know it works and needs a phone number or a chat bot or just the ability to chat with a person a few different times a year. We supply that as well. Where it gets kind of interesting is you start to branch out into 75 different countries and the service model becomes a little bit more bespoke, a little bit more unique. And so we enable lots of different tools around the world. You're calling an 800 number in the US because that might be what's prevalent, but you're chatting with us in WhatsApp in Spain in your local language. So we enable all those things. I can't say it's easy. It's certainly a challenge, but a lot of these modern tools make it as easy as it has been in history. So we feel like we're up to the challenge.
In any interview, these days you're being asked about AI and how that is going to play a part in the business. At this point here, we're in March of 2026. Like, how do you size it up at this point? Because there's so many different opinions flying around on TV and all the talking heads and stuff. How do you see it?
So it's a highly innovative set of technologies that's going to change the way we all interface. So I would chalk it up with the largest that we've witnessed throughout, our modern history, whether that's the internet, whether that's the smartphone, it's immensely valuable in that regard. And I think where we're trying to position our own employees and our own business is if you're not learning these tools, you will likely not be competitive over the medium and long term. And so you need to learn these tools. You need to start to interface with them. You need to challenge yourself to say, if my playbook from last year said that when I start in a new country, I set up a local support team, I set up local infrastructure, I hire local marketing resources, I hire translation resources, you need to ask yourself what AI could do to replace a lot of those tasks.
Yeah.
And we've seen lots of great examples inside of our own company. We had a translation effort inside of our software just to change the language that a merchant might see when they're using it. That was kind of one language at a time. And we kind of, with the snap of a finger and new AI tools, enabled 15 languages all at once.
Yeah, amazing.
It's not perfect, but it's certainly much better to make tweaks into each one of those 15 variants than to do one by one. And so we're seeing lots of room to enable these tools. I don't think we could be expanding internationally as fast without them.
Yep.
I don't know that it's replacing our most complex tasks, but it's certainly replacing a lot of these repeatable tasks in a way that allows us to spend our kind of creative energy on the tough stuff.
Yeah. You talked about allocating capital to buybacks, but obviously you're constantly investing in the business. As CEO, how do you kind of balance like growth and profitability? And where do you think the most important buckets are, generally speaking, for investment over the next few years?
It's an awesome question. I would say we wouldn't do it any other way, which is that our DNA is deeply rooted in a philosophy about how to spend a dollar.
Yep.
Jared, our founder, didn't take outside capital for the first 15 years the company existed. And so while we are tempted by many of our competitors that had a series A, B, C, D, and kind of have permission to light money on fire and to run a non-profitable business for, long periods of time, we've never subscribed to that.
Yeah.
And so I'll say at times I can feel like I'm operating the business with a set of constraints that's somewhat unfair vis-a-vis other competitors. But the truth is we think incredibly carefully about how to spend a dollar and what the yield on that dollar is going to be. And the balance to that rigid exercise is we are incredibly flexible on where that dollar gets spent as long as the returns make sense. So what I found culturally is we're very quick to do M&A if it meets the return on capital formula. We're just as quick to buy back stock. We're just as quick to invest in product. And we're quite unemotional about which bucket we're putting the money in as long as the return profile matches what we believe is the safest and highest return. So this concept of growth with profitability and a quick payback on the dollar deployed is something I think's very unique to Shift4 and our shareholders, that are with us in scale. That's what they demand. They don't want growth at all costs. They want prudent growth that is above industry averages at really high cash flow generation.
Yeah, and that's going to serve you well over the long run. I always think that companies can only do, 2 or 3 or 4 things really well in any given year. When you sit here looking at the rest of 26, what gets you excited? What are you fired up about the most when you look at the business where you sit right now?
We would tend to agree with you. The way we kind of build out our budgeting process for the year is we think about what we call BAU or business as usual looks like. This is the exercise of your finance team just dragging the Excel columns across and seeing what the yields on the business are. And then challenging ourselves to say, what are the needle movers that can really augment that growth curve? And we have a handful of them. And just having a handful, I think, is the right idea. Now, they're ambitious. They're very ambitious handfuls. But to give you one example, we are delivering the combination of our payments offering and currency conversion and tax-free shopping in a single handheld device. I've got one sitting kind of on the desk behind me in 15 countries that it never existed in at the beginning of the year. That is a needle mover. And to the extent we can build the sales forces required to do that, it's not as hard as it sounds. We already have offices in 75 countries. We already have local teams, and the product exists. That's the best part about it.
Yeah.
It will make a difference, not just in 26, but also exiting into 27. It's kind of will be a machine that contributes to the business as usual of next year. So that's one example of a needle mover. The other is making sure we're taking Global Blue's best-in-class products and applying them to the merchants that we have. For example, they're one of the largest currency conversion businesses inside of payments in the world, and we've never offered those services to any of our hotels in the United States, any of our stadiums, and the World Cup's coming and the Olympics are coming after that. And so you could really understand, hopefully, why the largest M&A transaction in our history was something we could have so much confidence in, despite a founder departure at the time. And that's because we knew we were buying a best-in-class product, and we had a merchant base that really wanted it, and vice versa on kind of the other side of the pond.
That was Taylor Lauber, CEO of Shift4 Payments. The company has a huge total addressable market. They're really growing organically and through acquisitions, and they're integrating all of it together into a seamless platform that takes away the friction for a growing set of customer bases and industry verticals around the world. And I think most importantly, they have a very disciplined approach to capital allocation. And right now, they feel a great return on investment is leaning into their share buyback and allocating capital to where it's going to produce that best return. We look forward to checking in with Taylor down the road to check in on Shift4 Payments. I'm Tom Ryan. We'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.